of 2022. It is my great pleasure to introduce Dr. Tucker Balch, who's a managing director at JP Morgan AI Research. The AI Research Group conduct research in areas of core relevance to financial services, including electronic markets, complex system modeling, cryptography, machine learning, and explainability. JP Morgan AI Research partners with teams across the firm as well as with leading academic institutions globally. Tucker is also a professor of interactive computing at Georgia Tech. He's also on leave right now, where his research has focused on multi-agent social behavior in domain ranging from financial market to tracking and modeling the behaviors of ants, honeybees, and monkeys. He co-founded Lucina Research, an investment software firm that applies machine learning and big data approaches to investment problems. Tucker has published over 120 peer-reviewed articles. At JP Morgan, Tucker leads a research team focusing on the simulation of large-scale multi-agent economic system, cryptographic trading technologies, and data security. His work has been covered by the Wall Street Journal, CNN, New Scientist, Institutional Investor, and the New York Times. He's graduated student work at JP Morgan's, NASA, JPL, Boston Dynamics, Goldman Sachs, Morgan Stanley, Citadel, AQR, and BlackRock. Before his career in computing, Tucker was an F-15 pilot in the U.S. Air Force. I wouldn't know without you mentioning this. With further ado, I'm going to ask him to start his presentation.
Sure, great. Before I get started, could you tell me a little bit about the audience? Are these undergrads, graduate students? What's their background? What are they studying?
80% of the audience are graduate students, mostly PhD. Mm-hmm. Then the rest we have faculty and postdocs.
Okay, PhD in computer science, business.
PhD in computer science, electrical engineering, aerospace. So we have maybe even faculty and student from Georgia Tech as well in this presentation. Yeah.
Oh, great. Okay, thanks. Yeah, the reason I was asking is it'll just help me know how to aim my presentation. And also, before I start, I just want to be sure my slide is showing correctly.
Yes, we see. Okay. We can see it.
Perfect. Yeah, so I don't think I'm going to, I know I've got a whole hour slated. I'm not sure I have enough to talk about for a whole hour, but I'd be pleased to also answer questions. And as I go along, I'll pause every now and then to see if there's any questions, but really happy to engage and have a conversation. Let me tell you, before I get started, let me tell you a little bit about myself. My PhD is in computer science, which I earned from Georgia Tech, we'll just say a while ago. And I was a professor at Georgia Tech in machine learning applied to mobile robots. And I was a professor there for about 17 years until 3 years ago when I moved to JP Morgan. My work at Georgia Tech over the last few years migrated towards machine learning applied to finance. In particular, I focused on trading applications. In other words, how can we use machine learning to create better trading algorithms? But at JP Morgan, we're expanding to look at not just trading, but many other uses of machine learning and AI. Anyways, at JP Morgan, I'm a research director. I'm one of 4 research directors. We all report to Manuela Veloso. Manuela was before she joined JP Morgan, she was a professor at Carnegie Mellon. She was the head of the machine learning department there. And so 3 years ago, our group was about 3 people, Now we're at 75, and we're growing. But I guess I just want to mention we are hiring. So if you want to send me an email at the end, please do. But we're looking, for talented people in AI, machine learning. Definitely need graduate degrees in those areas, but we're looking to grow to be on the order of 150 or so in the next 2 years. And of that group, I'd say all the researchers have all the researchers have graduate degrees in computer science and machine learning or AI. About 2/3 with PhDs. So that's a little bit of background on our group. Okay, so let me get started with the presentation a little bit more formally. This is just a overview. Don't worry about that. One thing, I'm, based on the audience, I'm sure you all have for the most part, an impression of what AI is. It's worth mentioning the origin of AI is there was a workshop in 1955 that was funded by, well, I'm sorry, 56, funded by National Science Foundation, and it included this really amazing group of people who are all now, very well known as sort of I hate to say fathers because there weren't any women there, but sort of fathers of AI. In particular, Herb Simon and Alan Newell from Carnegie Mellon, which I was at Carnegie Mellon for a while, and they influenced me. But they had this workshop in 1956, which all these folks got together and proposed some of the key problems for computer science that emerged and became artificial intelligence. And in fact, it was at this meeting that artificial intelligence, that term was created. I mentioned that there weren't women there. Unfortunately, back then there weren't many women in computer science or AI. Now there's a lot, and in fact, I just mentioned my boss is a woman, and at JP Morgan, our group is not quite 50% women, but we're growing very rapidly. I think we're about 33% women, so we're really proud of that and looking for more. Anyways, that's the origin of AI. Now, the way that we tend to look at artificial intelligence is inspired by robotics, and we can talk about more of the details of this diagram, but the key point here is if you think of this top part as potentially being a robot or an agent that's engaging with the world, there's this cycle of engagement whereby the agent observes what's happening in the external world. Observation for a robot is typically by cameras or touch or some other physical sensor. Then they process that input using some sort of model or planner. There's many different things that can happen here. Then an action is selected, and then an action is taken in the world, and that changes the world. And then this cycle continues, inexorably. The key point is, though, that at least the way we like to view artificial intelligence, it's a continuing process. It's not that you build a model or a deep neural network once and you're done. You have to be constantly looking at how well it's working, updating it, and changing it over time. And just a few things to mention. Of course, we're in finance and business, which is a little bit different than robotics. So we use natural language processing. We do use computer vision, but we use other modalities for sensing that are different than maybe what a robot might use. In terms of decision making, this is where most of what people think of as AI and machine learning lie. So there's planning and search. One thing I want to emphasize is nowadays, if you were to, corner a random grad student and say, what is AI? They'll tell you it's deep learning. And maybe they don't know about all these other aspects of what AI can be. And I want to emphasize that it's much more broad than just deep learning. And in particular, planning plays a big role. We do a lot of research in multi-agent modeling and processing, but it's more than just deep learning. Then actions are generated, and in our case, for instance, if we're thinking about trading, an action is to issue a order to the market. But there's other types of business that we engage in that aren't just about markets. So, for instance, we're very customer oriented, and large portion of our customers are individual people with bank accounts. We want to look at how they're behaving and anticipate needs they might have. So in that context, actions might involve reaching out to a client and asking them, hey, it looks like you've got a college age child that's about to go to college. Can we help you with your financial planning for that upcoming college education? So that's just an example of different kinds of actions that we might take. But key point here is we really view this whole engagement as not static but continuing, and we're always trying to improve the quality of our decision making from feedback we get from the real world. Just to let you know about the scale of JP Morgan Chase, it's obviously a large company. We're present in large portion of all the countries across the world. We've got the number isn't listed. Oh, here it is. We have 250,000 employees, and then over 120 million different customers. So within the U.S., for instance, 61 million households, 47 million customers active on digital. Of these 250,000 employees, 50,000 of them are technologists, which means programmers, developers, and so on. My point for mentioning all this is that just to point out that the focus of what we do in AI is not limited just to engagement with customers, but also in making our business run better. So we spend a lot of time educating our employees about AI. We spend a lot of time using AI to improve the performance of our employees. For instance, advising them and alerting them about clients and so on. But anyways, a lot of what we do is, like I said, focused internally within JP Morgan, but also externally across all these clients. The other thing to mention is, if you think about an investment bank like JP Morgan, the way I thought about it when I joined is, the main way they make money is trading stocks. Well, that's not true. Actually, the key revenue sources for JP Morgan are, for instance, payments. So each month, JP Morgan is involved in $10 trillion in payments. So that means money transferred from one company to another, from one country to another, from one individual to another. These are what you might think of as paying by check, but also a lot more than that. And making that happen quickly is of paramount importance. But how AI is involved in this is, unfortunately, lots of fraud and money laundering and so on happens through our pipes, and we're obligated, not just because it's the right thing to do, but also by regulation to be monitoring and being alert for fraud and money laundering and so on. And so we're looking very closely at everything that happens through this $10 trillion each month. Of course, we're also involved in trading, but something to mention is that we don't, we're not so much focused on trying to buy and sell stocks to make profit because of their price changes. Our job is to execute trades that our clients want us to execute. In other words, hedge funds, a hedge fund may want to buy a large chunk of Apple, or they may want to sell a large chunk of Google or something. And what our customers, so they're making the decisions, the investment decisions, but they're coming to us to execute those trades efficiently and effectively in a way that does not cause the price to move too poorly against them. So that's in trading, that's the way we make money, is by executing for our clients. There are 5 major components of JP Morgan Chase. The traditional part that you're probably familiar with as JP Morgan is the corporate and investment bank. So this is the group that has a seat on the major stock exchanges and acts as a broker and so on. We also lead IPOs. For instance, you're probably familiar with Slack, which recently went public. We facilitated their IPO. Coinbase, we also facilitated that. Anyways, we help bring companies public to the stock market. We also advise companies when they want to, it's called mergers and acquisitions. If one company wants to acquire another, we advise them on how to make that happen. Consumer and community banking is a whole separate chunk of JP Morgan Chase, and it's the Chase part. So you probably have seen Chase Bank in your community. I can't tell you the numbers, but we're growing very rapidly. We have Chase branches in most states, but our in terms of AI here, we're focused on making the customer experience smooth and effective. A key problem here, for us, is detecting potential fraud. I'm sure you've had a credit card charge halted or blocked, and it probably irritates you. Well, we're trying to detect potential fraud in such a way that we have very few false positives. Sorry, that's my dog. I can't. Not sure how to mute myself right now, but anyways, forgive my dog. Anyways, a couple other components of the bank that I'll skip for now. Now, where does AI research lie in all this? Where there's lots of course, computer science and data analytics and so on. Our focus for the talk today is AI research. Excuse me 1 second. I'm going to see if I can quiet my dog down. Okay, I'm back. What I wanted to purpose of this slide is to, there's lots of AI and machine learning going on at JP Morgan, and every one of those components of the corporation that I mentioned have their own AI teams, but for the most part, they're focused on taking existing artificial intelligence and machine learning techniques and applying them to a problem at hand and rolling out that solution rapidly. We've got a little bit of a longer focus. In other words, we're striving to innovate at the AI level. So we're not just taking existing solutions from, for instance, scikit-learn to apply to the problem. We're inventing new AI solutions to the problems that we have. The way that we've chosen to focus our group and what we do is we've created what we call aspirational goals. So these are 7 things that we want to accomplish. Maybe we're not going to accomplish them in 1 year, 5 years, maybe not even 10 years, but these are big goals that if we can solve them, or even if we move towards solving them, we know that we're we're doing the right thing. So I'll mention a few of them here. One that I'm involved in is AI to eradicate financial crime. I mentioned earlier that much of the world's commerce and moving of money comes through JP Morgan. And accordingly, unfortunately, a lot of the financial crime that occurs in the world ends up happening through our pipes. So how can we use AI to detect that and prevent it? We might not be able to eradicate it, across the whole world, but at least we can identify and eradicate, that financial crime that happens through our financial pipelines. AI to liberate data safely. Finance is all about data, and there's a lot of challenges to using data in a big bank like JP Morgan. I'm sure you're familiar with, every now and then there's a data breach and so on. Fortunately, JP Morgan hasn't had one of those large data breaches, but in order, we're very sensitive to that. We protect our customers' data, but because of that, internally, when we want to use data, we're limited because our company is very paranoid and conservative about sharing data even within the company. So we're looking at ways that we can use artificial intelligence and cryptography to share data safely within the company. Another one that I'm very active in is AI to predict and affect economic systems. So in fact, I'll talk a little bit about the prediction in a little bit. I'm not going to talk much about affecting economic systems, but the prediction is, kind of the classic thing you might anticipate that we'd be interested in is, can we predict the future price of a stock? And indeed, we look at that, and we can, with some limitations, predict the direction that a stock is going to take in the future. But we also focus on simulating large-scale economic systems. In fact, electronic markets and so on. And we use those simulations to investigate things like fairness and equitability in markets. Another big one to mention here is ethical and socially good AI. You've probably heard, in the news over the last few years, there's been some reporting on AI systems that are biased in various ways, and we want to ensure that the AI systems that we build are ethical and socially good. As an example, we look very closely at fairness with regard, say, to loans, business loans, auto loans, mortgages, and so on. It is, of course, the case, it's the law that we can't discriminate, on the basis of race, gender, religion, and so on. But it's kind of an interesting phenomena that machine learning systems, if you prohibit them from looking at one factor in say credit decisioning, like race cannot be considered, it ends up sometimes finding proxies for race and other factors that it can use. And so we spend a lot of time analyzing the outcomes of our lending decisions and evaluating how fair they are with respect to gender and race and so on. And we want to build credit decisioning systems that are fair and equitable in this regard, but also we need to make for the company, we need to make accurate decisions in terms of the likelihood that the loan is going to be successful. So we're able to build models that are both fair and accurate in terms of credit decisioning. Okay, so let me move to the next one. So I'm just going to touch on a couple different projects within AI research. This one I'm not involved in, but it's a very interesting one. I'll mention. A lot of the time of JP Morgan employees is spent generating PowerPoint decks. And one of our largest divisions, called M&A, mergers and acquisitions, they analyze companies that might be merged or acquired, and generate PowerPoint decks, describing the health of the company that might be acquired. But if we took a look at an analysis of how much time our employees in this division spent doing different things, and Excel and PowerPoint is where they spend some huge portion of their time. And so our thought is, the focus of this work is, can we streamline that work, with PowerPoint? And so we've created a integration of natural language processing, but also planning and AI that can enable people to describe slides or PowerPoint decks that they want, using plain text or verbally, and then then the system will create these slides. You can take an existing slide deck and modify it, or you can create new ones from new text. So this is just an example of creating a line chart from this text. Another growing project is called Bloom, and what this is about is looking at new companies, startups, and seeking opportunities for investment. So new companies, startups, they have a problem of, they need to find funding. Private capital want to fund these companies, but they want to fund companies that they think are going to be successful. And Bloom is a system that uses public information, stuff that's available on the web, to search out potential companies worth investing in. And there's a model of the success of these companies that's been created through machine learning. In other words, what's the probability that this company is going to be a success? But then there's also this challenge of matching potential investors to those companies. In other words, investors may have a certain a taste in certain types of companies that they're interested in, and the reason for that is the investors may have experience in different markets, and may be able to help and assist those new companies more strongly if they're a good match. Anyways, long story short, this is a platform we're building mainly to serve private capital groups to find companies that they might want to invest in. This is an interesting one. You've probably had an experience where you've gotten very frustrated with your bank, or you've encountered a stop on a charge you want to make that shouldn't have been stopped, and you're so fed up that you're thinking you're going to call up your bank and cancel your account. Well, what what this project is about is anticipating when a client is unhappy, and detecting that in advance and reaching out to them and trying to make it right, before before they want to cancel their account with us. Let me, this slide doesn't describe it very well, but let me sort of give you an example. You've probably received surveys where they, just simple question, on a scale of 1 to 10, how would you rate your interaction with our company? Where 10 is, I would recommend it to my colleagues and friends, and 1 is, I would, worst experience ever. We send those out a lot. Our Chase division sends, hundreds of those out, or I'm sorry, thousands out each day. but we get only a very small percentage of people respond to them. We would like a lot more, but we only have this small percentage. And the question is, okay, how can we leverage that data? And so what we've been doing is we've been taking these scores that we get back, this simple thing is called a net promoter score. And for the client that responds, we look at their customer journey. In other words, did they go to an ATM? Did they call us on the phone? Did they make a credit card charge? And we can look at these journeys over time, and then the score they gave us, and take that as an example. And then we can look across our millions of other clients and see if we can match, the journey of our other clients against, with the experience this client just had, and using that sort of matching across all these dimensions, we can predict what every one of our clients would say if they were to answer that survey. And for the ones that we anticipate would give us a low score, we want to schedule an intervention. We want to reach out and see if we can make it right. And so this is, I think, a kind of clever, unique application of AI. Planning. Your professor was just telling me about you all are doing classes in person. By the way, Georgia Tech is doing classes in person. It seems like every public university has to do classes in person. The Harvard is having classes remote, but anyways, JP Morgan is very adamant that we return to the office in person. Problem is, especially if you think about social distancing, we don't have enough desks for everybody. And so we've created a planning system that lets people input their preference for what days of the week do they want to be back in the office. Also, which groups, I'm on the computer vision group, I'm on the machine learning for trading group, and so on. And so what this planner does is it schedules people for specific desks according to which team they are on and which days of the week they want to be in. And it's an optimization process, but it's now being deployed across the company to facilitate returning to the office. One other thing to mention is an interesting outcome of COVID for JP Morgan and probably lots of other businesses is we've learned that people, so our company has been about 90% as productive as it was before COVID. And what that means is without everybody in the office, we're still performing almost as well as we did when everybody was in the office. But if you think about what it means to be in the office, these properties, my office is on Madison Avenue in Manhattan, and it's probably the most expensive real estate in the world. Well, maybe we can save money by not having everybody in this expensive real estate. Well, I'm in Georgia today. It's a lot cheaper for JP Morgan to let me work from Georgia than to have me in Manhattan. And so, however, it still is crucial to have people in person, so we can use AI to help us schedule those in-person encounters. Okay, I'll skip this one. Let me. I want to get to this one. I promised I would talk about machine learning for prediction, and in fact, let me call up another slide deck to talk about this. Also, let me pause for a second, see if there's any questions so far. No questions? Speak up. I can't see people's hands if they're raising their hands. Just unmute yourself and ask. Okay, I'll keep going.
I have a question.
Sure. Okay, please.
So I was gonna ask about you probably giving a description of a possible strategy for let's say a stock index with long volatility, how would you apply like machine learning to predict the stock price of, such a stock index in a, let's say, a volatile market? But you're going to talk about it, so
Oh yeah,
thanks.
yeah. That's my next topic. I'll this is one way of doing it. There's multiple approaches, but this is, I think, a kind of interesting novel way. So we call this project Mondrian. It's named after the artist Mondrian, uh, mainly because we thought some of the charts we were looking at reminded us of paintings by Mondrian. But let me get on with it. The the key thought here is, let's think about predicting time series as a computer vision problem. And rather than just taking the series of numbers over time, we're going to view the historical time series as an image. And let me explain a little bit why and tools we can leverage from computer vision to do this. And I'm going to talk about a particular technology called in-painting. So in-painting is an algorithm technology, whatever the appropriate term is, that's used fairly actively now in photo editing. You might have seen, I see ads for it on Facebook. I don't know exactly why they serve these ads to me, but it's a technology that, for instance, lets you take a photograph you have and sort of scribble over something that you want to remove from that photograph. As an example, maybe your old boyfriend. There's a picture of you and your old boyfriend at the beach. Scribble through the boyfriend, boom, it fills in where the boyfriend was with water and sand, and it looks like like the picture was originally taken without that person there. Now in this example that I'm going to show you, we're going to use that same technology, but to complete an image. So in this case, we've got a photograph of a woman, and there's missing data here in the middle, and we're going to use this same in-painting technology to complete the image there in the middle. And I'll explain in a minute how that relates to time series prediction. But we train a model, and I should say this is not, we're leveraging this work by others, in particular research at NVIDIA, but they've created a method of taking millions of faces, training a deep learning model that can then complete this image. And here's that image completed. Now, something to point out that I think is remarkable is it's able to fill in these missing parts in a very plausible way. A couple things to point out is, there's two eyes, there's one nose and a mouth. It inferred from the edge here that the person was wearing glasses and put glasses on there. Completed the hair coming down over the eyes and so on. Anyways, it's remarkable that there's potentially an infinite number of ways that this blank could be filled in, but it does a plausible job of filling it in well. And just so you can know, here's what the actual person. This is Manuela Veloso. So the completed image doesn't look exactly like Manuela, but it's a plausible completion of that image. Here are some other examples. This middle row is me, so we blocked out this part, and this is what it reconstructed. This is what I actually look like. This is my colleague Zhen Zing. You can see it did a nice job of filling in the gaps for her as well. So anyways, an interesting technology created by others, but we're going to leverage that now for time series prediction. And the general idea is the following. let's take millions of examples of time series, in particular stock price time series, and consider that the part that we want to complete, the missing part, would be the future. So let me show you what I mean by that. Here's an input, and we want to predict what's happening in this reddish zone, and we're going to use this in-painting technique to fill in what's there. And the way that we trained this system is through I think it was hundreds of thousands of examples of time series. And thing to notice here is we have 80 time slots of existing data, and we're trying to predict 20. But for training the system, we gave it 100 slots of time with prices all along the way. So here are some examples of here's the missing data, the reconstruction, and the ground truth. So focus on this middle column here a bit. The couple things to point out are it's a little bit, the future is a little bit blurry, and that's reasonable and appropriate because that that essentially corresponds to uncertainty, but it's not sort of uniformly blurry. In other words, there's sort of distinctive lines you can see here in this potential predicted future. So for let's look at this one. In this prediction, we have a strong sort of predicted future probability here and up here, but also here. And what actually happens in the future is we go up to this middle point, which sort of equates to this. And in the short-term future, that's the highest probability prediction. But after that point, there's sort of equal probability here and there. It turns out that it ends up coming down to this level. Now you might wonder what causes these particular predictions at these levels. The origin of that, and by the way, the reason you see these sort of jumps to sort of discrete prices is because we're sort of zooming in on price changes, and these steps probably represent 1 or 2 pennies in price changes. So in fact, in this case, there's only a discrete number of potential future prices this could arrive at because we're looking at 1 cent changes. This one has a much larger potential variation in prices because there's smaller discrete steps. But anyways, a very nice outcome that we're really happy about is we don't get just a specific predicted price. We get a probability distribution across prices, and it works nicely on this one as well. For example, here are here are some more examples. Long story short is we think it's working very nicely, and we're in the process right now of completing a journal article in which we're assessing it, and how accurate is it, how well does it work compared to other methods. The outcome is that it's working well, and indeed it does have predictive value. Well, another thing to point out is there actually are a number of machine learning methods that do have predictive value in predicting future stock prices. The limitation, though, for those systems is, the question, what you always need to assess is if you act on those predictions, is the payoff, from your acting, does it overcome the transaction costs? In other words, if you buy a stock, you inherently cause the price of the stock to go up, and as you go through the process of buying it, do you affect the markets more than the prediction of how much it would go up? These are just some more examples of that system that I told you. Couple other things. I'm wrapping up now on my presentation, but just wanted to mention a few other things that we do with at JP Morgan AI Research. We provide research awards to faculty. So far, we've funded 65 faculty research awards. These are annual, 1-year awards to 32 universities. We've funded 27 PhD fellows. We have a call for both of these every year. So be on the alert for that. The PhD fellowships fund PhD students for 1 year at their university. We also organize workshops and conferences. I want to call your attention to the ACM conference on AI and finance. This is the first peer-reviewed conference on this topic. We've had 2 years of it. This is not it's sponsored by JP Morgan, but it is a independent conference administered by Association for Computing Machinery. And if you'd like to know more, actually, these are internal to JP Morgan. Anyways, to find us on the web in general, go to jpmorgan.com/AI, and you can learn all about us. Anyways, that is the end of my presentation. Let me please take your questions if you have them.
Okay, thank you. So any question from Dr. Balch?
Yeah.
You go ahead, Robert.
Yeah. So I was about to ask a question. So in doing this stock price predictions, do you take into account the type of like moving averages or the let's say a simple moving average for closing prices for the last 15 days versus the last 3 months? Do you take into account such variables for a certain stock index?
Well, just to be clear, the data we're looking at is our individual stocks. So we're not doing looking at indexes. But it could work appropriately for indexes as well. But anyways, the answer is no. We're looking just at the time series information, which we convert into an image, and we treat it. All the information that we use and that we consider is this image of the time series. Now, one thing to mention is we're beginning to look also at order book information. So this approach works most effectively intraday, which means during the day, because it's over a shorter time period. So these sorts of predictions become more and more difficult. If you look at daily or monthly data. Because over those time scales, markets are much more efficient. But anyways, like I said, we're finding more success or higher predictability intraday. And what we're doing now is to these images, we're adding information about what the order book looks like. Just to inform, just to mention what that means is, the order book represents orders that people have sent to the market that haven't been executed yet because there's not yet a match. Someone may want to buy the stock for less than someone's willing to sell it for. And so you have this gap between the best bid and the best ask. It's called the bid-ask spread. And above and below those two prices, you may have lots more orders. And so we've created a visualization of what that order book looks like. and we're going to use that information. So this image here, this before image, is going to be a little bit more complicated because it's going to include that order book information, and we believe that's going to provide an even more accurate future prediction.
Thank you.
But by the way, those features that you were asking about, those are definitely appropriate features for a predictive model. But we're trying to take a image or computer vision based approach, and so if any information that we would use, we want to present in a visual sort of way. Okay.
May I ask a question? These
Sure.
time series, are you treating them as a stationary or non-stationary time series?
So yeah, it's a good question. The market itself is, of course, non-stationary. Any particular, the way we build the models is we're constantly retraining with new data. So in particular, for this sort of stuff, we find that data that's older than a month or two, the dynamics of the market is probably changed. So what we do is we retrain our models weekly, and we drop off the oldest week and retrain using the newest week. So and we also assess. I mean, this isn't an active part of our process, but we realize that we can detect if our predictions aren't working, which means the market dynamics have probably changed, and we're trying to build methods to detect that the model's not good right now and that we shouldn't be using it. But yeah, we certainly assume that the market is non-stationary.
Thank you.
Hello, Dr. Balk.
Hello.
I have a number of questions for you. I don't want to monopolize your time. A couple of them that I have is that do you take into consideration the cross correlation between stocks? For example, a change in semiconductors, how it affects stocks related with the automotive industry. On a separate note, as a second question, if those networks, those entities that you are training, if they can be used in high frequency trading.
Right. So I think the correlations between different sectors and the relationship between stocks in the same sector and other sectors is more evident over daily and monthly data. It's probably less evident in intraday. So anyways, we're focusing right now on intraday data and intraday analysis. So but in terms of how we do the training, we're using all of the S&P 500 stocks and their intraday performance across each day for months, but we're not currently clustering them, although I think that's a good idea. For instance, it's very likely that financial stocks may have a different sort of intraday behavior than technology stocks. I think that's exactly right. We don't yet account for that, but I think that's a clear next step in our work. But in terms of correlations or if you think about a correlation matrix, I know that's a common tool. We're not using those in this work.
I have one last question, please. Would you invest in Bitcoin, if in not Bitcoin, in cryptocurrency, and if you have a favorite one?
So I'm definitely not supposed to give investment advice. I can say what I do. I have a
Nobody can do worse than I, so don't worry about it.
I have a personal small percentage of my portfolio in a couple companies that will, if Bitcoin explodes, I'll benefit, but I'm not expecting that it will. I will say that and this is just me speaking personally. I just want to emphasize this isn't JP Morgan advice. If you think, I think cryptocurrency is a lot like Las Vegas right now. And if you look at Las Vegas, who's making the money? The casinos. So if I were to invest in cryptocurrency, I would invest in the casinos. So Coinbase and the other exchanges, those are the, whether Bitcoin goes up or down, they're taking a slice of the trading, either direction it goes. So anyway, I think that's where the good crypto investments are.
Thank you.
Sure. And I do own a few shares of Coinbase.
The other day I was watching this. I was watching an interview of Jim Simons. Has he ever published? Because I know that these guys were the first that they brought in Wall Street and in funds the concept of artificial, not the concept of machine learning, to be precise.
So Jim Simons, he founded the hedge fund Renaissance Technologies. It's one of the most successful hedge funds ever. They're a JP Morgan client, by the way, but they're a client of all the major brokerages. Anyways, he was a mathematician. He early on figured out expect statistical methods to predict, how the market was going to go. I think they focus really on intraday high frequency trading methods. They're very, very successful, but very, very secretive. I will mention one thing about their company. I don't know if you're familiar with hidden Markov models. They're used in speech recognition and other natural language processing approaches. A very early innovation in hidden Markov models is the Baum-Welsh method of learning a hidden Markov model from data. Anyways, sometime in the 90s, Baum of the Baum-Welsh algorithm joined Renaissance Technologies, and he's never been heard from since. So anyways, since nobody at Renaissance Technologies is allowed to publish, but they have hundreds of PhD researchers working there. And nobody really knows what they do, but they return, between 30 and 40% every year. And I don't know how they do it.
Thanks so much.
Okay, I guess I'm out of time, but thanks for the privilege of being able to present, and good meeting everybody here.
It's a pleasure having you. Thank you so much, Dr. Balch. And for your information, two of our students from this lab, from our lab, were